Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 14th of August. Starting off with the FTSE 100, and we're struggling to hold on to that uptrend line from last month. 7,500, I suppose, a line in the sand on an end-of-day close basis. So above that, we've still got the chance of rallying back to early August resistance near 7,700, and that February resistance line, black line there. Otherwise, we roll over and maybe test the mid-July support area around 7,400. Obviously, it would be better if we managed to avoid that scenario. And the key here also, the 200-day moving average around 7620. Be better to be on the right side of that by the end of the week. Onto the DAX, which is also struggling with a line. In this case, it has been the uptrend line from this time last year, or basically August last year. That's running at 15,800 at the moment, so we managed to bounce off that to start the week, which is great. The 50-day line there, the blue line there, around 16,100, so an end-of-day close is required above that to give us a retest of 2023 resistance. Big picture target is that we head towards 17,300 by the end of next month if we make a quick recovery back above the 50-day line. We'd also like to see the RSI now at 46 break back over neutral 50 to get us back in a more bullish frame of mind. But at least so far, after multiple tests of that line from last autumn, the market so far holding up, and something you'd expect really, with the 50-day line going flat, but the 200-day line still rising there. On to the Dow, and here it's it's all about 35,000. You can see that we managed to hit our March resistance line target around 35,200, and then we've just traded either side of it, which is perhaps not that helpful. Below 35,000 is 34,600, and the 50-day line just below it, blue line there rising. So in a way, this market also looks pretty strong in terms of the moving average projections that we've got. We need to see an end-of-day close through 35,600 to open up the chance of heading as high as 37,500 by the end of next month. Obviously, that seems a bit strange given the time of the year. You don't normally see a rally in September or even August. But anyway, that's still waiting for us potentially while we hold above that 50-day line. RSI in the mid-50s, which is the right place actually for a fresh move to the upside. On to Bitcoin, which has been continuing to tease us with this 29,000 area either side of the 50-day line. Tried to get through 30,000, haven't done that so far. Probably looking now for an end-of-day close through the 50-day line and 30,000, and also the RSI to get back above neutral 50, where it's failed over the last week or two. So everything really about breaking through 30,000. On the downside, below 28,600, we risk a test of the 200-day moving average at 27,100. But at the moment, that seems to be something we could avoid. One or two repeats in the stocks from yesterday. First one is Asiamet, which was looking good, obviously, for the 1.5 pence target at the top of that March rising trend channel. Above 1.5, we're looking for as high as 2 pence by the end of next month, or perhaps even sooner. So let's see if the new improved picture at Asiamet pans out for the share price. Altitude, a stock which doesn't get much coverage here or anywhere else, is next, and here we've gapped up, got a rising 50 and 200-day lines, rising trend channel there heading for 55 pence. Best case scenario, while we're above recent resistance, July resistance at 42, as we head up to 65 pence by the end of next month. But that's not a very popular stock at the moment. Maybe it'll become more popular. Moving on to Cadence, and here's some signs of recovery as well. Gapping up today, breaking that line of resistance there from April. The message here is that the longer we stay above the 50-day line, around 8 pence, the greater the chance of a move to 11 pence plus, on top of that broadening triangle from April by the end of next month. Chill also starting to stir after the pullback that we had from near 14 pence back in May. So the shares quite a hefty retracement there, but we bounced quite nicely along the rising 200-day moving average. There's an uptrend line there from February as well, around 4.75 pence, and we've just broken that line of resistance from June. I did cover the stock as a potential rebound. last week or the week before. Above that broken line at 5.5 pence, we're looking for around 7 pence over the next week or so. The only thing missing here at the moment is the RSI to get back above neutral 50 versus 48. It hasn't been above neutral 50 since back in June, when the share price was nearly double what it is at the moment. But looking steady above 4.75 for chill. Onto a stock which I did cover yesterday. And here we've got eEnergy, and here the situation is we've broken out of that V-shaped bull flag. We've got rising 50-day line as well. Above the July peak, around 6 pence. We're looking for 7.5 pence over the next few days, and maybe up to 10 pence by the end of next month, or even sooner. Helped along by recent stake building news. Another stock which is looking like it might want to continue breaking out is Edenville, and here you can see that we've had a V-shaped bull flag again, rising 50-day line, and end of day close above July resistance at 12.5 should be enough to take the shares up to as high as 17 pence, hopefully by the end of this month. The shares have behaved pretty well actually since that trend line break back at the end of May. Getting the papers is normally a nice thing for small cap companies, and actually Equipmake, not actually that smaller company. In fact, I think the market cap is 70 or 80 million, but we've got a rising trend channel here. Top of that channel heading for 16p. Hopefully we can see that by the end of this month, given the 25% jump on the newspaper appearance that we had yesterday. Upside valid certainly while we're above the 9 pence level, which was recent support. Moving on to another stock which is trying to give the bulls a good time, Gaming Realms. Here we're in a bull flag that's been here since the beginning of the month. Bull flag above, consolidating above old May resistance at 32 pence or 32.5 pence. Message is that the longer we stay above 32 pence, the greater the chance of a move to the top of that rising trend channel from the beginning of last year, as high as 46 pence or 47 pence. And ideally we see that by the end of next month. But that bull flag there looks encouraging. Stock from yesterday as well is Hellenic, and here you can see that the shares have made nice progress from Friday's push through the 50-day moving average. The view now is that while we're above the 50-day line, around 0.08 pence, we should head up to 0.14 as soon as the end of this month. So reversing recent sharp losses for June and July. On to Marula, which I suppose is the star of the show at the moment. Here you can see that the shares continue to push towards the nominated target, which was 20 pence. Hopefully now we could hit that by the end of this month. Especially if we get a decent end of day close above 14.5 pence, which was the previous all-time high for the shares. The upside backed by a rising 50 and 200-day moving averages as well. On to stock which I've been very keen on for some reason, even though obviously the recent history has not been great. Here we had a target of around 83 pence, which was a February resistance line, while we were above 66 pence, so that's been achieved. End of day close above 83, and we could be looking at £1.10 as soon as the end of next month. The reason for the excitement here on a technical basis was last week's unfilled gap to the upside. In fact, that was a bear trap island reversal, because we gapped down and then gapped up. So that is actually a very strong signal indeed, and I think we've gapped up again today. So hopefully there will be further moves in Novacyt, and ideally we stay above that old July peak around 76 pence ahead of a potential move towards £1.10, only well below 70p now, really questioning the ongoing recovery. A stock which maybe some people would be slightly wary of given its recent history is Osirium or Osirium. But here we have broken a line of resistance from June and the 50-day moving average around 1.5 pence. That 50-day line is rising near the lows, which is a signal in itself, and the view now is that above 1.5 we could hit as high as 2.5 pence by the end of next month, although quite what fundamental backing might do that is maybe something more of a mystery. Another stock in the paper over the weekend is, or was, Poolbeg Pharma, which The article finally sort of cottoning on to how fantastic AI is going to be for the medical area, and obviously Poolbeg would be a major beneficiary. Surprising the shares are not nearer to the top of their range, around 11 pence, but there's always time. Above 7, recent triple tested support, looking for a break of that November resistance line around 8 3/4 pence, and then up to 12 pence, perhaps by the end of next month. Bullish divergence line there as well, helping the cause. On to the last three. First one is a rather well-followed stock, Premier African, and here shares making good on that trendline break that we had at the turn of the month. That was around 0.45. At that time, we were gingerly looking for the shares to return to the 200-day moving average around 0.65. We got the gap to fill up to 0.7, and then the best case scenario here by the end of next month, up to 0.8 pence at the top of that rising trend channel from back in June. Good RSI action there with a couple of bounces off neutral 50, so that explains the decent move today. In the near term, the stop loss should be at the 50-day moving average at 0.56, ahead of potentially 0.8. On to Rainbow, which looks like it is stirring in a positive way at the moment. Here we've gapped up and back above that resistance, the previous resistance line target, at around 12 3/4, above 12 3/4 on an end of day close basis, looking for 17 pence, maybe 18 pence by the end of next month. And the upside value, especially while we hold above that 50-day line, trailing just below 12 pence at the moment. Finishing off with TAP Global, which put in a bumper update today, obviously going from strength to strength. The shares, rather surprisingly, lower than they were before. The company said it was going from strength to strength back in February. They were near 6 pence, but we have gapped up today, and we have consolidated above a rising 50-day line, so it looks as though the minimum here on the upside should be 3.7 pence, and then after that, then we can obviously look and see what the next target may be, but at least while we're above 2 3/4, looking for 3.7 or 3 3/4 for TAP. That's it for me today. More updates tomorrow.